Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Rivian has had a nice recovery on the stock market, but the company's challenges from an operational perspective don't seem to be getting much easier, and the EV space is a lot more competitive today than it was just a year ago. So I want to go through three predictions that I have for the company. May not all be great for the company's operations and the stock going forward. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing, in the show notes. The first prediction I have comes down to Rivian's pricing. One of the things that's difficult to discern with Rivian is what is the natural supply and demand for the company's products, because they're just ramping up production, not a lot of vehicles on the road today. And so we don't know, is the $80,000 price point too high? Is it too low? We don't have a perfect answer for that, but there's a few hints that we have. One is that the R1T is now available in as little as 3 weeks. You might remember as little as 6 months ago, management said that they had demand all the way into 2024. Well, it's not 2024. They have introduced most of the new options that are available, and still you can get a vehicle in as little as 3 weeks. Now, potentially as long as 26 weeks, depending on what your configuration is, but that is a lot shorter time frame than I would have expected to start the year. Now, the R1S is a little bit of a different story. Remember, management said in the second quarter call that most of what they're making today is actually the R1S. So that's another sign that the R1T, the truck, maybe doesn't have as much demand as you would expect. But the R1S sits in an interesting place because there's not really another competitor with a 6 or 7 seat electric vehicle, at least not yet. So the price point of about $80,000 is maybe not the same deterrent that it is with a truck, where there's more competitive options. If you go through the configuration tools, this still says that delivery is expected in 2024, but I had a reservation earlier this year, and the time frame for that delivery continued to come down. So the indication was that people were actually canceling their pre-orders. The challenge for Rivian is that they are now much higher priced than a lot of their competitors. If you've been following Tesla, you know that Tesla has lowered the price of the Model 3 and Model Y, so those are a little bit smaller vehicles, but they actually recently lowered the price for the Model S and the Model X. The Model X would be the best competitor today to the R1S. They're a little bit different vehicles, so not exactly the same, but the Model X now starts under $80,000. And that was a big price reduction of about 20% for Tesla. So that was a big change for them. I think within the next year, we will see Rivian need to reduce their prices to try to build demand. One of the big reasons for that is higher interest rates are really just starting to flow through the system. So there was a excess demand coming out of the pandemic. Now we have more supply in the market, both of electric vehicles and of non-electric vehicles. The challenge is that interest rates are much, much higher than they once were, in excess of 7% most times for new vehicles. So that makes it much harder to finance an $80,000 vehicle. We also have new vehicles coming to the market. This is the Chevy Silverado EV. We also have the Ford F-150 Lightning. These start at a price point of around $50,000. So especially with the R1T, that's your competition. Can you keep charging $73,000 for the R1T, just the basic package, when competitors are charging $50,000 to $55,000? I think that is going to be a challenge for Rivian in the future. The next thing to look at is Rivian's cash, because I think ultimately Rivian is going to have to raise cash in the last year. One of the strange things is that even in the past 6 months, Rivian has actually raised cash through debt. So we know that management is at least thinking about how much cash they have on the balance sheet. This is a little snapshot of exactly what free cash flow. This is up here. The blue line is cash from operations. The purple line is free cash flow. And these are on a quarterly basis. So each quarter, the company is burning between $1 and $2 billion. There is over $10 billion in cash on the balance sheet. At the current run rate, that is less than 2 years of cash on the balance sheet. We should see that cash burn improve as production picks up in the second half of this year and into next year. But I do think that management is going to need to raise more cash. The higher stock price that they have recently could actually be a great opportunity to do that. We also know that spend for the manufacturing plant in Georgia has not really ramped up yet. That is supposedly a $5 billion plant. So that's another investment that is going to need cash. I don't think that Rivian can get to cash from operations positive with the R1 lineup. At the current facility, they only have capacity for about 150,000 vehicles. They're going to need to get to the point where they build that R2 facility in Georgia, add about another 400,000 units of capacity before they're going to get to cash flow positive. The current cash on the balance sheet, I just don't think is going to be enough to get there. And the final prediction comes down to that Georgia plant. Now, the company apparently has the go ahead to build that plant. We did not hear much about it on the most recent conference call. What management has said is that most of the construction of that facility will be in 2025, with operations starting in 2026. If you know anything about the history of electric vehicle manufacturing plants, you know that that is probably an optimistic target. I don't think we get vehicles coming out of the Georgia facility until at least 2027. And that means that Rivian is going to need to have the cash to get to that point. So not only the cash to build the Georgia facility, but to fund operations if they're not cash flow positive from the normal Illinois facility until the Georgia facility is operational. So right now that target is 2026. And if management is targeting 2026, as investors, we should actually be thinking about a year later than that. So 2027, I think that's when we may see an R2 vehicle come off the line. But what do you think about Rivian's pricing and future growth and future manufacturing plant with the R2 vehicles? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.